Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday market recap. Hope all of you had a very good day of trading and a very beautiful week of trading as well. And in today's markets, well, we got a beautiful jobs report over the course of the morning, which really sent the bulls into a frenzy for the remainder of the day. The expected move for today, guys, was about 1% up or down, depending on the results of that jobs report. And we roughly did just that. SPY up about almost 1%, 0.9, and the QQQs over about 1.19%. But all in all, guys, there was some very nice broad market rotation, not many sectors getting left behind at all. So it was really a broad day of bullishness. So in today's video, guys, we're going to take a look, number one, at that jobs report, take a look at the numbers and why they were so bullish for the markets. Number two, we're going to take a look at our major technical analysis rundown. First, our major indexes, and then, of course, after that, our major big tech names, see if there's still some good deals to be had in these markets. And then number three, guys, we're going to take a look at my portfolio, see the trades that we made for the week, recap a few of the profits, and see how I'm positioned into next week as well. So a decent amount of things to cover today. Let's jump right into it. So as we said, SPY up about 0.91, QQ up about 1.19, but all in all, guys, it was a very broad day of bullishness. Take a look at the heat map right here, and you can see big tech performing very well, except for Microsoft lagging ever so slightly behind. Tesla and Amazon and Meta really having beautiful days. Semiconductors, again, having another green day. Financials coming back in a roaring fashion after being relatively muted all through the course of the week. Today was one for the books in financials. Healthcare continuing their slight mutedness and declines into today's session as well. The sector was green on the day, but I wouldn't say that the sector is very strong nonetheless. And the bottom half of the market as well, guys, industrials, energy, real estate, one of the ones that was a pain trade today. But for the most part, guys, very, very healthy day in terms of broad market rotation. You can see that even better when we take a look at the one-day relative. Everything in the green except for real estate getting left behind a little bit after running very, very hard for the last 2 months, guys. This sector is just taking a well-deserved breather. And where we sit on the 1 week relative right now, well, the market is still relatively mixed, right? We know that the early portion of the week was not too good for most sectors in the market, which is why on the 1 week right here, you can see to the downside still basic materials, real estate, consumer defensives, and healthcare and consumer cyclicals. Those have been, except for consumer cyclicals, of course, these bottom four were some of your largest gainers of the past 1.5 months as the market embarked on kind of a defensive narrative, right? Rotation from tech and growth into defensives. These were some of your largest winners. And now that we're kind of seeing a little bit of a pivot back to growth, pivot back to semiconductors, pivot back to big tech names, well, some of these more defensive plays are taking a well-deserved breather. But all in all, guys, still very healthy rotation, which reiterates my point. Rotation is the most important aspect of trading, guys. We need to learn how to follow the money and pivot to the sectors that are most in favor now in terms of for our weekly swing trading purposes, of course, right? For a long-term portfolio, you don't really need to track any of this stuff. Just go shopping for your favorite companies at decent discounts, right? Now, all that being said, guys, before we get into more technical analysis, let us jump into the non-farm payrolls jobs report this morning numbers, and you'll have a look, guys. They were very, very, very good. So take a look right here, guys. In terms of your average hourly earnings, number one, the expectation was for 0.3, coming in at 0.4% month over month. That is very, very, very strong right now, guys, right? In terms of an annualized rate, that is above, or very close to about 4% or slightly above, depending on which month you measure it. That is well above the rate of inflation right now. So consumers are slowly getting back that purchasing power after the inflation that we've had, right? Now, average hourly wage growth is growing faster than the current rate of inflation. So we're slowly getting that purchasing power back. Now, next off, we got the non-farm payrolls, of course, adding over 114,000 jobs more than was the estimate. Of course, 140K was the estimate, and we came in at 254,000, a very, very bullish number here, guys, of course. And then lastly, we have the unemployment rate. Unemployment rate coming in at a cool 4.1%. The consensus was 4.2, and that now ends the most recent 3 months worth of upticks in the unemployment rate. Let me just zoom into this chart right here, and you can see, right, we started off in May 3.9, June 4, then it started accelerating, July 4.1, and culminating in the August print at 4.3. Over the last 2 months, though, now it's been coming down. As you can see, September was 4.2, and now the read we have in October, 4.1. So So unemployment rate right now is still sitting, guys, at relative historical lows. Take a look at the chart, right? We are not up here in the pandemic highs, and we are also not in the post-recession highs of 2009, 10, and 11. So I would still say the unemployment rate right now is still relatively manageable, right? Even if you think the data is fake, you can add a couple basis points right here to the unemployment rate. You can remove 60, 70, 80,000 jobs if you want to, if you think the data is fake. But even if you do that, guys, the data is still good. It does not show that we are falling off a cliff right now, at least for the time being. Trust me, I myself too I'm taking these numbers with a little bit of a grain of salt, right? We know the numbers can be a little bit more bullish than they may truly be in reality. However, the one thing we need to notice is, are they falling off a cliff or not? As of right now, no. Are there a few red flags in the economy right now in terms of the economy slowing down because rates have been high for very, very long? Yes. Is there pain in the consumer discretionary spending segment in terms of consumers having less disposable income to splurge on non-discretionary items? Yes. But are people losing their jobs by the hundreds of thousands and into the millions? No. Is the economy falling off a sharp cliff in terms of output and production capacity? No. So we will continue to monitor this data one data release at a time, kind of like the Federal Reserve. But as of right now, the preferred outlook is indeed still for a soft landing recession, if any recession comes to the front. So I remain in my view, guys. I remain cautiously optimistic in these markets. I'm about 65% bullish, right? 35% bearish. I'm being very data dependent right now, but you guys will see with the positioning in my portfolio, most of my trading portfolio continues to remain long until the data gives me very good reasons to pivot heavily in the other direction. Do I have about 10% of my portfolio right now in hedge trades for some downside? Yes, but the majority of my portfolio is still positioned in a cautiously optimistic fashion. And I think that's the biggest takeaway from today's data. In terms of next week's data, of course, well, not that much. We have a bunch of Fed speakers coming out early on in the week, and I think they're going to talk down the long end of the rate curve. We know that long-term yields have been on the rise, right? We've seen it consistently since our rate cuts about 2 Thursdays ago at this point, right? You guys have seen what's happened. This is the rate cut candle right here, and yields have simply spiked since then, right? Why have yields been spiking? We've been talking about this a few times on the channel, just because they spiked in the opposite direction prior to the rate cuts when we were getting terrible data through the month of August. This is pricing in a hard landing recession. So now we are pricing out the hard landing recession, going back to the soft landing narrative right now, which is why yields are correcting ever so slightly to the upside. But keep in mind, we are still going to be in a long-term downtrend for your overall yields. Why? Well, because rates are going to come down over the next 1 year of time, guys. So this little temporary spike in yields, I do not think will last. If anything, we may just be topping out here in terms of the short-term rally in yields, which means that in my humble opinion, bonds are very, very, very close right now to being in a bottom out cycle, right? It's just a bunch of rotation between the narratives right now. Big rally to the upside when we're thinking that the economy is going to go into a very hard recession, and now unpricing that very, very quickly. But I do believe that those 20-year bonds should have a more normalized rate of increase over time, because one thing's for sure, whether we go into a hard landing recession, a soft landing recession, or no recession at all, for the most likely scenario, rates will be coming down unless we see some significant inflation on the horizon, which nobody is expecting right now as a whole, right? Consumer inflation is down, the port strike is kind of out of the way right now, and consumers are tapped for spending. So where is all that inflation going to come from? I do not personally see a catalyst for it just yet. So keep that in mind. After those Fed speakers, we do have the CPI report coming in on next Thursday, and you can see the expectation right here is for 2.3. The prior month was 2.5. I do expect this to be coming down as well. So moving closer and closer to the Fed's 2% target, I largely think that inflation is essentially conquered right now. So that's pretty much everything for our news release. Hopefully that was helpful. Now let's dive right into the technical analysis, and we will see not much has changed, right? The bulls never lost control all throughout this week of basically sideways action or nothing action, still in a very confident daily uptrend. right now. So your daily higher lows are set. How do we know the daily higher lows are set, guys? We recaptured the hourly uptrend, something we did not have since putting in the highs earlier on last week. Now that we have the hourly uptrend, we can confidently say that the daily higher lows are set right here, 565.78. So now we are just going to be looking for the continued progression of this daily uptrend, and maybe with today's momentum especially, and especially considering the way the weekly candle closed, I would not be surprised if early next week we once again do continue this weekly uptrend on the SPY towards the all-time highs. So as of right now, guys, no red flags whatsoever. And in the event we fail the all-time highs, do not make new all-time highs and roll over a little bit lower. You guys know the drill. Been talking about this all week. We would just be due for a little bit more weekly consolidation, but the bulls have tons of space, guys. Anything above 540 just for the higher low on the weekly for possible further trend continuation. But as of right now, no red flags whatsoever. QQQ getting a lot of love today, 1.19% to the upside. A lot of that was due to semiconductors and a lot of very nice big tech performance in the mix. So taking a look at the chart right now, daily uptrend is more than confirmed by your bulls. Daily higher lows are now set with the previous lows back here. How do we know that, guys? Well, the hourly uptrend has now been recaptured by the bulls, now healthily above our short-term moving averages as well. So confident in saying that the daily higher lows are now set 477.66, which is also confluence with the bottom end of the support region and your short-term moving averages as well acting as support. So looking for the bulls to embark on this trend expansion as early as next week, and the weekly does point to that as well. Very nice weekly candle close pointing to some continuation for momentum over the course of next week. So we'll keep a close eye on this trade, and even if we fail this high and roll over to lower lows, you guys know what's going on, right? Just going to be looking for weekly higher lows for further weekly trend continuation. Anything above 449, the bulls have tons of space to set it up for that trend change in the event we just roll this move over. Now, moving on to financials. So financials looking very good today after being stuck in this tightening range. They have now embarked on the bullish push up. We knew that we had double lows. We were keeping a very close eye on the break of these lows today. We did not get it. Instead, we moved higher. So now you have a confirmed daily uptrend targeting the all-time highs right now, about 45.87. Not looking too bad. Even on the weekly, we were saying, right? Weekly uptrend was being confirmed by the bulls. We were just in a tightening range of accumulation, which is otherwise known as somewhat of a bull flag on the weekly, looking very good for some possible weekly expansion into next week. We would need to break those all-time highs. Of course, guys, we got financials, and my apologies. Yesterday, I showed you guys the wrong earnings chart. It was a chart from prior years in the past. I do apologize for that. My mistake. Now I actually have the good one, guys. I took the one yesterday on Twitter. Didn't really check the date, too much of that. It was from a source that I use quite often, and unfortunately it was just the wrong one. So now we have the good one, guys. Banking earnings next Friday, October the 11th. JP Morgan Chase, Wells Fargo, BlackRock, a few more players. And then the week after that, on the week of October 15th, we have a bunch more, right? Goldman Sachs, Bank of America, Citigroup, Charles Schwab, and the rest of our major banks will be reporting then. So financials is the first ones on deck. And next week, not much in terms of big earnings before that Friday session, unless of course you count Delta Airlines and Domino's Pizza. So looking forward to seeing what financials are going to do, but financials leading in to those earnings may be a little bit muted, right? I would not be surprised if they tighten up this range a little bit more, or even if they break out of the all-time highs. I'm not expecting massive continuation prior to those banking earnings. So we'll take a look at how they go over the course of the next Friday session. Now moving into healthcare, one of our weakest sectors as of lately, right? We knew they had a very powerful move in pretty much the month of August. While the entire market was falling apart, healthcare was doing its job. Now that the rest of the market is very broad, healthcare has taken upon itself to have a very nice period of consolidation. Healthy price action, in my opinion. So the daily downtrend continues. We are now trying to find a local bottom here. Prior resistance should now become local support. And the healthcare sector, at least on the lower time frames, we're getting quite oversold here. Not quite exactly oversold, but we're coming into that general area, right? So at a certain point, we will need to see a recapture from the bulls of the hourly uptrend. So far, that is not the case. Need to set the hourly higher lows and move into a new hourly uptrend. Could possibly be getting it as early as next Monday. The MACD on the 1 hour does seem to be willing to cross right now, so momentum could indicate a possible reversal. Then we'll watch for the size of the bounce in relation to 154.21. Get me high as possible to be able to reset this into either a V-shape engulfing move and reset the daily uptrend, or at least a high enough bounce that the bulls create enough space to set up for the daily trend change in the two-step process. On the weekly time frame, yes, we have lost the weekly uptrend. We are now in a weekly downtrend, trying to find the lows. But until we get that daily uptrend conversion, we cannot say that the weekly lows have been set just yet. Now, this one, you kind of need to zoom out a little bit more to figure out what the bulls are doing. So we have a beautiful monthly uptrend right now, just looking for a monthly higher low in healthcare, guys, for the eventual continuation of the trend expansion, probably likely end of October into November and December, bullish seasonality coming back. So healthcare having a very nice technical sell down right now, but I wouldn't say that there's any long-term timeframes in terms of your long-term red flags, rather, in terms of your longer-term timeframes. So I do believe that this is a buying opportunity for some of your possible favorite healthcare stocks, or if you just want to play the index ETF, decent little buying opportunity as well. Now, moving into semiconductors. So semiconductors not looking too bad either, right? 1.34% to the upside. Cannot complain about that. But we are coming into our ever so challenging area of resistance with 257 down to about 248. The bulls tried it last week and failed. Now, we still do have the daily uptrend. Daily higher lows have been set with the lows earlier this week, and we're just looking to continue this pattern into the highs. We'll keep a close eye on whether or not they can break this one coming into next week. Now, in the event we were to fail these highs and then come back down to our lows, we'll keep an eye how we react to these lows right here, whether or not we break them, go into further weekly consolidation, or whether or not we just kind of get into some form of a tightening range. I'll remind you, these semiconductor earnings do not really start until October 17th, when we get our first big one, which is going to be TSMC. So still a few weeks away. We also have ASML right here on October 16th. There's a few more in the mix, but those are definitely the two biggest ones to be watching out for, at least in the next 2 weeks of trading. So keep our eyes peeled for that. Semiconductors for me is still a trade that I like playing, but with short puts, wanting to benefit from the volatility. So I'll be looking to write short puts under this index ETF or in individual names as well. One of my favorite names leading into earnings season, guys, one that's kind of come down and hasn't been getting a lot of rally love, is ASML. ASML is in my sweet spot buying location, lower 800s down to about 750. Love this company. And look at the longer term timeframes, guys. The monthly, trying to find some monthly lows into the prior all-time highs back here. Could be a decent little opportunity to build a position on ASML if it's a high conviction stock as much as it is for me. So that's pretty much my favorite trade in semiconductors. As a whole, though, the rest of the industry, guys, still in a weekly tightening range. We do not yet have the confirmed weekly uptrend. For that, you would need a breaking close above 255. Moving into the Russell right now. So the Russell also not looking too poorly at all, 1.4%. And the Russell trying to get a nice little bounce going. If we can recapture a little bit more of this move, the bulls will set themselves up nicely, guys, for either the engulfing move and be able to reset into a daily uptrend up here, or at least the two-step recovery process. As per now, the size of the daily bounce higher is exactly 61.8, which is exactly what we want to see. That is a decent amount of space created to reset the daily uptrend. So not looking too bad in the IWM Russell, and even on the weekly, guys, not looking too bad as well, right? The bulls did a great job of maintaining this tightening range, reacting from the 12 EMA earlier on in the week. So we'll keep our eyes peeled, guys. If the risk on momentum continues in the market, we continue orienting ourselves towards the soft landing narrative. That is what this trade really needs to start flying, right? So IWM positioning could be good for a little bit of a swing trade, but this one is highly contingent on the continuity of good data. So keep that in mind if you're trying to play the Russell right now. We have big area of resistance above us, and it will only continue with the upside momentum, guys, if the data continues to come out in a fairly bullish fashion. Myself personally, I haven't been playing the Russell exactly. My proxy for the risk on trade, my preferred proxy currently is Bitcoin. Moving into the Dow Jones right now, Dow Jones, no problems at all with this one, 0.81% to the upside, looking very good. Continuation of the daily uptrend in a very beautiful fashion right now. We had some equal lows being put in with the low of yesterday, and now we're kind of trying for the trend expansion, but we're still stuck in a relatively tightening range up here. For the new all-time high and daily uptrend confirmation, we would need a break of the prior all-time highs, 42,620, right? In the event we were to fail this and roll over into next week, just understand that that would be daily downtrend. And at that point, we'd just be looking for our, you guessed it, weekly uptrend into weekly higher lows for possible further weekly trend continuation. So if the markets fall apart for XYZ reason, keep in mind down here, 41,300 down to about 41,000 is going to be confluence with that weekly 12 EMA prior resistance. This could be a very nice breakout, retest, and run zone if you're interested in some Dow Jones swing trades. Now, that's pretty much it for our major sectors. So we already covered bonds earlier in the video, not going to kind of belabor that point too much. Let's move on to the Bitcoin trade right away. So moving into Bitcoin right now, Bitcoin looking very, very, very healthy right now, guys. What did we get today? Well, we got the hourly trend change, right? It happened overnight yesterday and carried itself through the morning today, looking very good, back above our short-term hourly moving averages, which we have not had since those highs have been put in at the 66. And we were kind of looking for this, right, guys? Looking to bottom out in this green box that I kind of labeled on the chart. Very big area in the past, right? Yes, I know we came a lot lower, but you can't deny that the 60,000 has been a hotly contested area in the past. When we break below it, it acts as resistance, as you can see right here and here as well. So it stands to argue when we pull back into it hard, it can be acting as support too. And that's exactly what happened today with the risk on trade because of the bullish jobs data, right? What were we looking for on the weekly, guys? This was a weekly trade setup, right? We know that Bitcoin's been struggling to maintain any semblance of a weekly uptrend currently. And this was an important move with the move into 66. What did we do that we did not do any times in the past? Well, keep in mind, right? This was a nice move higher, but not 100% and above engulfing. This was a nice V-shaped recovery, but not 100% engulfing. This was a nice recovery, but not 100% engulfing. Now look at this one. 100+% engulfing move. So the bulls have the best odds of setting up for a weekly higher low for possible further trend continuation. So when you have that area right here that we're targeting on the daily, this green box, the weekly moving averages are right here. That is when we should be bidding for a little bit of a swing trade. If we're wrong, no problem at all. That's what happens in trading sometimes. But at least we're going with a high quality setup. And that is what I kind of want to focus our attention on right now. So daily looking pretty good for some expansion. We'll keep an eye on it. And the weekly higher lows as well, guys, looking pretty good, looking like they kind of want to set them right there for some possible expansion into next week. We will keep an eye on this. The only time this one comes undone is lower high. This as resistance, lower high, into lower low. The daily downtrend is continuously in motion, and we will be hunting for a new weekly higher low, possibly down in the 58,000 location. But as of now, the bulls do control the short-term hourly timeframes. We'll see how that progresses into the next week of trading. Now, moving into our big tech names. So Apple, not looking too bad, 0.5% to the upside, but Apple is just stuck, right? Apple is completely stuck between this 227 and roughly 223 range. So no clear price action, defined trends right now. They tried for the daily uptrend, equal highs, and now also equal lows to the downside. So no defined trend right now. You need to see a break of either of these two levels. 233 to the upside, that would confirm the next daily leg of upside for the bulls, and a break to the downside right here of this 223 level, that would be daily downtrend underway. And either way with this one breaks, guys, well, if it breaks to the upside, 233, you now have a confirmed weekly uptrend. We have not confirmed the weekly uptrend yet. 3 equal highs. That is not a new weekly uptrend. If anything, it's just a triple top. And to the downside, guys, keep an eye on the weekly for 214. Even if we break down below this 223 level, it is not a weekly downtrend just yet. You'd need to break 213. So sideways consolidation for Apple right now. Very tough to determine which one will break. This one will be a byproduct of the overall market, in my humble opinion, right? If the SPY and QQQ continue their upwards momentum, Apple will most likely follow suit. If SPY and QQQ break down from today's move, Apple will most likely follow suit. And I'm only going to be interested in playing some Apple short puts below 214, think 210, down to about 205. And for that, I would need Apple to come a little bit lower. Right now, the risk reward for Apple is not so favorable, especially at a very high valuation. We did it at 214. Right now, it's arguably a lot higher. Well, not a lot, probably about 3.2 peg. And we know that the iPhone 16 sales has not so far been the upgrade cycle catalyst that Apple was looking for. As a matter of fact, the iPhone 16 new sales and pre-orders have faltered even in relation to the iPhone 15 sales of last year. So not quite getting the job done, but as a whole, guys, not many red flags, right? I have some long-term shares in Apple, and if you want my opinion, this one is just a hold. I'm not buying any more up here. I'm not selling any up here because there's no massive red flags for the company. I'm just holding what I got. not willing to add any more to it. Now moving into AMD. So AMD rocket ship today, 5% to the upside, reacting beautifully on our retest area into the lower 162 down to about 154. This is the trade we were kind of looking for, right? Daily uptrend, breakout of the range, retest into the range, and now run in a very hard fashion. So looking very good. Congratulations to all the AMD bulls out there. Now the next target, guys, is going to be this gap fill location right here, which is going to be about, let's call it the 177, right? So that's going to be the next stop, 177 up to about 180 in terms of resistance. It's been resistance in the past a bunch of times. So that's the next level I'm looking at on AMD myself. In the event we pull back, we'll just understand we are looking for a daily higher low for further trend continuation. And if we do pull back, I'll probably be writing AMD puts aggressively in the mid 150 zone, guys. Looking very good for some expansion. The weekly bulls are in full control of this chart. And that's why I say the next stop right there is about that 178 up to about 182. Let's just call it the mid 180 or the actual 180 mark for resistance, right? The bulls looking very good. And take a look at this monthly chart, guys. The monthly bulls are going for the engulfing move. It was a monthly downtrend. Now the bulls are looking to fire it up for possibly a nice little engulfing move here coming into their earnings, which I do believe will be quite good. So congratulations to all the bulls. And if you feel left out, just wait with me for a possible dip. If it just runs away from us, guys, that's just sometimes what happens in trading, right? But if we get a dip into the early Monday or Tuesday session, we need to be quick with writing some short puts down there. Or if you want to go for some call debit spreads into earnings, you can do that. Just be mindful, right? A lot of volatility on the table, and the move is somewhat a little bit extended right now, right? The risk reward isn't the greatest. Your upside reward is about 180, 185, and the downside risk is about 157, 155. So it's like equidistant right now, right? It's about a 1-to-1 risk to reward. Not the best right now, so be mindful of that. Now, moving into Amazon right now. Amazon, beautiful recovery on the day, 2.5% to the upside, and Amazon just reacting beautifully from this zone that we were kind of calling out on the channel a few times over the past week, right? This whole area, it's not one line. You can move this up or down a few dollars. You guys just get the general area we're looking for, right? Support, resistance, and now support for Amazon. So nice to see the bulls reacting from this general area in a very nice fashion. Now, daily uptrend by the bulls was lost because they cut the lows. So now what are we looking for here, guys? Looking for the size of the bounce. Be mindful though, coming into resistance very shortly, 187 up to about 190 on Amazon. If the bulls can get through this and give me a 618 retracement size to the upside, about 189, 190. If we can make it up back there, even if we get rejected, guys, we create enough space to possibly set up for the higher low into higher high daily uptrend recapture. And if we get that daily uptrend recapture, we can sufficiently say that the weekly higher lows are set and that the bulls are maybe looking to march forward for another weekly leg higher, once again trying to get to the $200 psychological level of resistance. So Amazon looking very good. Took a few trades on this one this week, and both of them have played out extremely well. This one was also on the watch list here in terms of what we're looking at for short puts on the week. So hopefully you guys are able to capitalize on the fear-based selling yesterday and maybe write a little bit of options such as the one that I did. Moving into Google right now. Google also not looking too bad at all, right? 0.81% to the upside, looking very good. Daily trend is pretty much in the bag for Google bulls right now, setting the higher lows yesterday, right into the confluence of moving averages, and now looking for that expansion. Where are we expanding into though, guys? Keep an eye on the resistance zone, 171 up to about 179. I know it's a wide range, but just be mindful that the bulls may be challenged in this location right there. As of right now, though, no red flags. If we were to roll over without creating new highs into a breach of 165, daily downtrend would be underway. Keep an eye on the 162. And at that point, guys, we would just be looking for a weekly higher low for a possible shift into a new weekly uptrend. But as of now, the bulls have engulfed 100% of this most recent leg of selling. It was a weekly downtrend, 100% engulfing move, looking good. Either they're going to get the full V shape and engulfer and retest like this and then run, or if we do it from here, could get the retest down here or so slightly and run into a second attempt at this zone. All eyes on Google for now, guys. Extremely good valuation for Google. right? Even at 168, the PEG ratio should be about 1.25. Extremely cheap. It's the cheapest name in big tech right now. I love it a lot, even though it's ran from the bottoms. Do not let that dissuade you from adding this beautiful company to your long-term portfolio. Still a very, very healthy valuation. Moving into Meta stock right now. Meta, powerhouse, guys. 2.26% to the upside, going for the $600 psychological resistance, and we are almost there. The bulls in absolute complete control of this one, and now running away with it, putting on a show. So second leg of daily momentum higher right now. Daily uptrend well underway. Even if we were to lose this, or if we were to lose this momentum and retrace a little bit, just looking for a higher low, anything above 555, looking for a higher low for further trend continuation. How do you know when a move is topped out, guys? Look for the loss of the hourly time frame, right? As of now, hourly time frame extremely bullish. If you see the rollover and loss of the 12 EMA, which should be your guide at all times on the, look how well it respects it, right? Hourly time frame and the 12 EMA for short-term, control, who controls the uptrend or the downtrend. Watch for loss of the 12 EMA, watch for the lower low, lower high, lower low pattern. Then you will know the daily move higher is likely done. And then you're just looking for the daily higher low, anything above 555. But as of now, looking very good. And look at this monstrous move on the weekly, guys. Beautiful, beautiful, beautiful trend expansion. So hopefully you guys were buying the dips with me on Meta. I was kind of screaming on the channel, right? It's cheap, it's cheap, it's cheap at 500. I said it a bunch of times, right? After their earnings, twice after their earnings, I was saying how cheap this stock was. And even up here at the 515, 520, it was very good for an ad for a long-term portfolio. So very nice, guys. Congratulations to all the Meta bulls out there, looking very, very, very solid. And look at this weekly MACD, right? Starting to cross over after pretty much consolidating for the last, let's call it 5-6 months at this point. So now possibly looking to just continue expanding here into maybe even the high to mid 600s, even $700 over the next 3 to 4 months. I would not be surprised. Moving into Microsoft right now. So Microsoft down a little bit, 0.12%. The only loser in big tech today, but Microsoft is just a solid company, guys. This is an anomaly, in my humble opinion. Nothing, absolutely no bad news has come out of this company recently to warrant this sell-off. This is just technical price action at its finest, right? So as of right now, daily downtrend is still underway. How do you know that this move down is finished? Keep an eye on your hourly trend change. Still no defined hourly trend change by your Microsoft bulls. We're kind of teetering between the oversold locations and not. Even on the 4-hour, getting quite low on the RSI. In my humble opinion, guys, probably the lowest we can get is maybe the 200-day moving average, which is down here at about 410. So keep an eye on that. If we make a big move down into there, most likely your short-term 4-hour and 1-hour timeframes will be oversold. The daily won't quite get there just yet, but that would be a very juicy buying opportunity for Microsoft right now. What the bulls are looking to do on the weekly, looking to set up for the weekly higher low for further trend continuation. And now at this point, anything above 400, just looking for that weekly higher low for a trend expansion, guys. I think this is a great buying opportunity for Microsoft here and DCAing all the way through 400 if ever it falls there. Great location for a long-term portfolio. There is nothing wrong with this company. And even for a little bit of a swing trade, guys, Microsoft is going to play catch up, right? We know what happens. It goes on these consolidation phases where it doesn't lose too much. And then as quickly as it dropped pretty much, it can pop back up very, very, very aggressively. You see it all the time on Microsoft, right? So just be mindful of that. When this one comes back in favor, it'll start launching and we'll be probably going for that next leg of weekly expansion. And if all else fails, if anything, you just have a beautiful area of long-term support down here to be basing some trades with some size off of. Now, moving into Netflix. Netflix finally getting that expansion right now, guys. So we were mindful of this, right? We had been back testing the prior all-time highs all week pretty much, and now looking very, very good for some continuation expansion. Daily uptrend is healthy right now. The higher lows are set at around $700, $698 to be more specific. New leg on the daily has been started right now. So the bulls are looking very healthy and we got a lot of support below us too, right? In terms of the weekly, no red flags. Weekly has always been in a beautiful leg of expansion right now, and this week is no different, looking very good for some bullish momentum continuation, maybe into next week. Next area of resistance, guys, has to be the 750 psychological. So keep that in mind. Netflix looking very good, and they do have earnings coming up Thursday, October 17th. So 2 Thursdays from now. So still a little bit of time for this one, guys, to kind of move up. And the more that it moves up prior to earnings, even if we get bad earnings, guys, it's going to have a lot of cushion, right? We know Netflix moves about 6-7% on earnings. So if you get up to about 740, 750, Let's take the midpoint, 744 right now. If we have that 6-7% drawdown, we're literally going to come right back into the support, and it will be a buying opportunity. And that is if we create enough space before those earnings. Moving into NVIDIA right now, NVIDIA also not looking too bad, 1.68% to the upside. NVIDIA looking like it wants to go for it, right? But this chart has kind of been, it had a very nice pop and then dropped immediately after the open. We've spent all day kind of recovering, right? But no red flags to speak of just yet, just not the normal price action. When Amazon's up 2.5, AMD's up 5, you're probably used to seeing NVIDIA up like 5, 6, 7, 8%, right? But NVIDIA just hasn't really been NVIDIA recently, has it, right? Still kind of consolidating sideways. That being said, we are in a very nice daily uptrend, and we're going to be looking for a break of this area right here, 127, for a continuation of the daily uptrend higher. Resistance is set put at around the 130, 132, so keep that in mind, but no red flags as of right now, right? In terms of the weekly also looking good, but still kind of in a tightening range until at least we get a break and close above that 130. So we'll keep an eye on this one for next week if we get that weekly uptrend confirmation. Weekly uptrend confirmation will mean your monthly higher lows are set, and we may just be looking for another leg of monthly momentum higher. Moving in to earnings season for semiconductors, I maintain my favorite way of playing NVIDIA right now is not buying right here, guys. Even though it can have some upside, I think there's better semiconductor names for the upside continuation. NVIDIA's valuation right now is somewhat expensive, right? I'm a bigger fan of AMD or TSMC on some dips, or even ASML, but there's nothing wrong with NVIDIA. It's just the way that I prefer playing it is writing short puts under big levels, right? So into next week, if we get a little early week dip on NVIDIA back down to 120, maybe tempted to write maybe the 112s, 110s if I can find some premium on the stock. Moving into Tesla right now, Tesla with a beautiful day, 3.91%, almost 4%. So erasing a lot of the damage that was done over the last day of trading. Daily uptrend is still well in control of the bulls. Daily higher lows are now set with the lows of yesterday, 237. And the bulls are looking to have a second attempt at attacking the 265. 265 has been elusive for a while, guys. Failed it once here, twice there, 3 times there, 4 times here, right? And the list pretty much goes on. But you guys can see how challenging it's been for the bulls since September of 2023. That being said, coming into a few bullish catalysts, we have the Robotaxi event on October the 10th. So pretty much on next Thursday, and then the following Thursday after that, or rather 2 Thursdays or 2 Wednesdays further, is going to be the earnings. So a lot of possible bullish catalysts for Tesla right now, but very, very tough for me to play this one. If you are playing it, you would have had to been in pretty much since down here, and you have some good gains. But taking it right here, guys, is a little bit of a gamble, right? Because in the event we roll over, the risk to reward is kind of 1-to-1. The take profit has to be at 265. Take profit number 2, of course, you can put it all the way up to the $300 range, but at least your TP1 is going to be roughly at 265, and the stop loss to the downside is below here, 235. So it's literally equidistant, right? Very tough for me to start a trade on Tesla right here. In the event we roll over, that is where I might be able to take a position on Tesla, targeting some short puts down here, 220 all the way down to about 215. But all in all, the bulls are not looking too bad. I'd be lying if I said they didn't control the daily. They do, and they also control the weekly time frame as well. Not looking too bad for Tesla bulls. So congratulations to all you guys out there, myself included. I still have my Tesla long-term shares too, just no short-term swing trades for me for the moment. And Palantir, finally closing above $40. So congratulations to all you Palantir bulls out there, myself included, still have the long-term shares. The next area of resistance, well, to be quite frank with you guys at this point, right? There isn't really any. The next area of resistance, very short-term intraday. These are daily candles, right? No daily candle closes in that region right there. So you can argue there's short-term intraday price action. But in my opinion, guys, this is blue sky breakout. Yes, we do have some price action in the past, but nothing in terms of daily or weekly closes, right? So for all intents and purposes, there's nothing up there right now. So the bulls have pretty much ran away with this one. Blue sky breakout territory right now, looking very good, but keep in mind, getting a little bit extended here on the daily RSI, even on the weekly too, but no red flags. The bulls control this one fully, right? We have the new daily higher lows set right here, 36, and now looking very good. So any pullback, going to be looking for new daily higher lows for possible further trend continuation. Now that we're above the big area, which was 39.38, could be acting as some short-term support, breakout, retest, and possibly run. That would be a possible short-term swing trade. In terms of a longer duration swing trade, guys, need to see a little bit of a pullback on the weekly, right? We know we've had Beautiful 4 or 5 weeks of trading in the past. If Palantir, for XYZ reason, right? Overall economy, overall stock market, company specific news, anything like that. If we have a reason for a pullback and we pull back into the 35, 34, that is my desired location, right? We know Palantir goes on these crazy rallies and then can have 2-3 weeks of pullback. Same thing happened right here. Same thing happened here as well, right? It's going to come eventually, right? I'm going to be keen on waiting for that pullback here. If we can see 35, 34, I'll be looking to play some short puts in the 33, 32 location. That's just how I'm playing Palantir. And that is pretty much everything for our stock market recap today. Hopefully you guys appreciated that. Now let's jump into my portfolio. And before we cover the stocks that I currently still own, the positions that I still own, let's go over a few of the trades that we did close for the week. So here is the private Discord for our members. Just to recap the week, as you can see, the wheel trades were very, very good, guys. 6 wins, 1 assignment, and only 1 loss on directional trades. Very, very tiny loss. The win largely made up for them, and all those wins here largely made up for it as well. So in terms of these 6 wins, well, earlier in the portfolio, you might remember I had the TSMCs that we wrote last Friday. We were able to close those yesterday, as a matter of fact, for a very decent amount of profit. As you can see right here, 80% profit, as a matter of fact. We wrote them last Friday on the big dip. 1.8 or 170 was the strike price, and we closed them yesterday at the high of, or close to the highs of yesterday's trading. So very happy with the way that trade went specifically. Number 2 was Amazon. Amazon, we wrote these on the Monday session after Amazon had a little bit of a dip, and then we closed them on the Wednesday session. So Amazon, I benefited from this price action to the downside, wrote them fairly close to the low of the day, and then on Wednesday at the high of this little candle right here, if you can see it, right? That is when we closed the trade on Amazon. Didn't need more than that. 2 days of theta decay, roughly equal prices. That led to us being able to close Amazon at a 63% win. Very nice win there. The rest of the trades that I might not have shown you guys because we only did this update on Monday were taken throughout the week. SoFi, you might remember, I mean, these are still in the portfolio for all intents and purposes, right? SoFi, $7.50 puts. We wrote them last week, right? For about 2 weeks worth of time. And we got about 1%, 0.5% per week for 2 weeks worth of a trade. SoFi ending at about $8.20 today. Very nice. I keep telling you guys, when I see an opportunity for some short puts around the 750 area on SoFi, I will take them every single time. $7.50 down to $7, my ideal location to be playing the wheel strategy on this one. And once again, this one paid some very decent premiums, right? So that trade pretty much 100% win, as you can see right here. It'll just be out of the account by tomorrow. Thereafter, we had the Square. Square, I did not show you guys. This one, very nice trade. We opened that on the Wednesday session. $63 puts. It was on the top 5 options play. So I'm telling you guys last Sunday to keep an eye out for the Square trade dips. And we got the dip opportunity on the Wednesday session. We went for it, and now we're rewarded, guys. Pretty much 100% worth this. So that was a 100% win on that wheel strategy. Uber, same thing, right? I gave you guys this one as a bonus play on the top 5 options video. I was saying watch for any and all Uber dips into this big area of support as low as you can get. I was lucky enough on the Wednesday session as well to get the $71 strike, as you can see, ending well above. So that one is a 100% win for us as well. BITX, all right, so Bitcoin, I was telling you guys I wanted to make a play on Bitcoin. We took this one yesterday afternoon. Right, so when Bitcoin was kind of selling off yesterday, we took this one on the yesterday afternoon session, and we got almost 1% in premium. As you can see right here, we got 20 cents for a $24 put. Gave myself a decent amount of space down here. This would be Bitcoin 58,005 roughly. I was pretty sure we would hold support. So this one, another 100% win. That was pretty much 1% in a single day, guys. A very good ROI right there. And with SoFi, we already talked about. The only one we got assigned, guys, is new. So I've been talking to you guys about this one for, I tackled it on the Monday session too, right? 3 contracts, 13.5 puts. We barely got assigned today. New holdings closing at about 1323. So we are now assigned 300 shares right here at about the 1350 level, right about here. So on the Monday session, if we have a little bit of pop continuation, we'll be able to write some covered calls. In the event we drop ever so further, I will be looking to average down into the position around 12. I think this one on longer term timeframes, guys, is fairly self-explanatory, right? Just looking for the monthly higher lows for further continuation. Beautiful stock, beautiful growth estimates. Warren Buffett owns it as well. So everything looking very good there. And that is pretty much your recap for the wheel trades of the week. The OXYs, we've tackled this a little bit. The only ones, the CL, you guys might remember the Colgate Palmolives, right? It had the call debit spreads, and I'll explain the trade and why we closed it, right? So we opened Colgate Palmolive when it was back in this location right about here. And why we opened the trade was because we were looking for the weekly higher lows to be set with the 12 EMA that we had not lost, guys, since October of 2023. So it stands to be argued there was a swing trade right here, but now with the close of yesterday, we closed this one yesterday, right? When we broke down below, when we also lost the daily, right? When we lost this level, this was the area that I was looking for us not to lose, the 50 EMA on the daily as well. As you can see, same thing, held it since October, November. When I saw the breakdown as of yesterday's trading, guys, we closed the trade right away. The trade is invalidated. Loss of the big levels on the daily, loss of the trend continuation trade on the weekly, trade is invalidated. We just take the loss, right? So we're winning most of these trades, but sometimes every now and then we do lose some when the trade gets invalidated. The gist of the strategy, right, is closing the losses early as soon as you are invalidated. So those are the recaps for the ones that we closed. In terms of the ones that we still have open, right, I'll tackle the Oxy in a little bit. So the ones we still have open, we opened an Amazon trade today at the low of the day, guys. This one was a very good trade. We took this one live with our private Discord members. We pretty much tackled this low right here, wrote the 180s for next Friday, and the rest is pretty much history. Amazon, nice recovery. I like that 180 level, guys, and I've been telling you, I will be aggressive with it when I see some dips, right? So when we dipped early on in the morning, I saw an opportunity for these Amazon 180 puts, paying $1.27 for next Friday. Took it, and now we're pretty much 50% profit right away. Time decay over the weekend. If Amazon has a little bit of a rally on the Monday session too, at the open, we'll be able to close this one probably for 70-80% profit in a single day of trading. Happy with the way that one went. I still have my alimentation shares that we got assigned. This was a wheel trade, so still have this one, guys, and we went with an average down. A little bit too far to write some covered calls from the assigned strike price of 80. We went with the average down trade for next week, $72 puts for 48 cents above our 0.5% rule, and they're trading roughly at par right now. Alimentation is one of my favorite Canadian companies. I don't expect you guys to know a lot about this one, but they Circle K is what you guys probably know the brand under in the United States. A very nice long-term trend, guys. Most of your analyst expectation, tremendous company, by the way. Not going to go through all the fundamentals. Beautiful EPS expansion, beautiful revenue expansion as well, at least over the next 2 years. A little bit choppy here because they do convenience stores and gas stations, but bottom line profit's never been a problem for them. All of the analyst estimates as well, decently above the current share price. Long-term uptrend and a lot of buybacks for the stock as well, right? So not too nervous about this one. That is just the fact of the matter. And in terms of our average cost, I've outlaid everything I've done proactively to reduce my average cost on the left-hand side right here. Couple covered calls in the mix, one dividend as well. Our average cost is now down to about 77.41. So we're not too far off, right? Now, moving further, BITX was a swing trade that I took today based off the same Bitcoin logic that I was kind of telling you guys, right? This trade is just a 2x leverage version of Bitcoin. We're just looking for the expansion, right? I'm looking for the weekly trend expansion into 66. Target for this exit is going to be roughly around that high 65, 66 location. So we'll see what happens through there. And the stop loss, guys, is below here because then that invalidates the possibility of the daily uptrend formation, right? It would just be daily downtrend, further weekly consolidation, and that would be the exit for the trade. So stop loss below this level on BITX, right? So these are the short puts that I just showed you guys in the Discord that are expiring worthless, so we're not going to talk about those. CrowdStrike is another trade that I took, guys, with our members yesterday. CrowdStrike looking very good. Very, very simple trade right here. Trend continuation pattern on the weekly, right? So very nice weekly uptrend in formation right now. Weekly higher lows. Using this whole area as kind of a base of support. Moving averages are there as well. And we were looking for the bottoming out of the daily. Look, curling above the moving averages right now. Took this one yesterday for the daily higher lows to be set, right? Weekly uptrend, daily higher lows. Into prior resistance, which is now support. Moving averages 2. So looking for that expansion, going for the gap fill in the mid 300s. So that's the trade on CrowdStrike. Went with some shares and also went with a call debit spread for February, 300 versus the 310 calls for about $4. We're nicely up on those two positions right now. Disney, I've had this one for a while, guys. This is just a recovery trade, recovery story trade. A lot of time on these calls. Google, bull call debit spreads. Those are good. Those are up to about $2 right now, looking very good, about 25-30% profit right now. We'll be looking for Google to make its way up into the $170 range. We also have the Google Leap calls as well, as you can see right here, the Leap 135s. We covered them up, right, with a decent amount of premium. Our exit right now for this whole strategy would be about 171. 165 on the short calls plus the premium gives us an exit price of 171. We hold these through to November 1st and then evaluate whether or not we close the whole strategy or not. But at least for now, we're locking in an extra $600 something towards our leap play, which is already up a very decent amount, up about 42% on those leaps right now. Very good. Just looking to protect the profits in the event we get some market weakness. The Intuit trade is still live. We've talked about this a bunch on the channel. Just looking for Intuit to doing a full portfolio recap right now, right? As we usually do on Fridays. Intuit still holding levels, nothing fancy here, looking for the eventual expansion into the 660, 670. A lot of time, there's a lot of time on these shares, right? No expiry on the shares. And now but all jokes aside, a lot of time left on this debit spread, January 630 to 640s, which is about midway through here, right? So moving on further, Microsoft is another trade that I opened this week. We have some bull call debit spreads, December 435, 430, 435, 440, excuse me. Looking for some expansion, guys, back into our most recent highs, which is literally just here, right? 435, 440, not that far away. First feeler trade that I opened just the other day, roughly around the current share price. It was around 420 actually, so not roughly around the current share price, roughly about 2% higher, but I will be looking to average down. I only went very light so that I have an average down opportunity. I like the time that I have on these. I like Microsoft as a whole, so I'm building a position slowly into these contracts right now. Micron, this was the asymmetric bet. Leap calls well out of the money, looking for some recapture. A lot of time on these contracts, guys, looking for the next semiconductor run to really pull these ones up. Netflix bull call debit spread. I think we went over these before, right? Looking for some Netflix expansion into that 730 range, which we might just get as early as next Monday. Looking good. Take profit territory will be as early as next Monday or Tuesday. If we can make it up into the lower end of our strike right here, the 730s, we should be able to close these for about 250, which would be a nice roughly 15% gain, 15+% gain. Open these just last Thursday. So just about a week and a half, 15%, I'll take it, right? These Nikes were a lottery play for earnings. $33. I went for the 2-time standard deviation move. The logic was very simple, right? A lot of bearishness around Nike, and I was looking for any positive catalyst out of the company to really have a Starbucks effect, right? Or an Intel effect. Unfortunately not. So it was a gamble I was willing to take, didn't pay too much money for it. And that is the key to these outsized moves. Do not pay a lot of money. We only lost $33. No harm, no foul. The new, we talked about it, they're assigned. This is an NVIDIA dividend that I got, so I'm rich now, I guess, 84 cents in NVIDIA stock. Let's go for the 100X, guys. Not too much there. I'll probably just close it out. The NVO trade still down, but I'm going to keep this one, guys. A lot of time left on these contracts. I'm not convinced that NVO is down and out, guys. I think they might be able to recapture right here. It's just healthcare as a whole has been really out of favor the last 2 weeks. We really haven't had any bearish news out of NVO, just not much bullish news either, but the production is ramping. Their EPS and revenue growth is fantastic. Daily oversold conditions, if I move my big hat out of the way, daily oversold conditions. So the last thing I want to do, even though if we want it to be technically perfect, I should have closed this trade right here when we lost the daily higher lows. Opened it here, looking for that continuation. Should have closed it as quickly as I closed the Colgate, but I have a sentimental attachment to this one. Not really, guys. It's just there's time left on the contracts. Healthcare's been weak. I want to give it some time to recapture a little bit of the losses right here. Let it run a bit away from me. Yes. So this is a mistake, not a technically perfect trade. I will admit it. I do not often deviate from my own strategy, but I'm looking to recapture the loss. This one probably will be closed at a loss. I'm just looking to recapture a little bit more of that loss. So, berate me down in the comment section if you want. This is one of the largest losses we've taken on a debit spread since I've been showing you guys the debit spreads, right? Probably one of the only big losses we've taken in the last 3 months on debit spreads. So it's not very often, right? Very, very rare. OXY, still have the contracts we got assigned at 55. Now it's looking good, guys. We wrote some covered calls earlier in the week. Our average cost on OXY right now is about 54.16. I always keep an assignment tracker. If you're in the Discord, of course, assignment tracker for all our average costs. 54.16 is it. If we get called away next week above 55, perfect. We're out of the trade. These are the $55 calls. As you can see, they're up very nicely right now. We closed one today. SoFi getting called away. Square. This is another one of my asymmetric return bets. January 16, 2026, $100 calls out of the money. Square is very, very cheap right now. I'm looking for some big price appreciation over the next 1 year worth of time when the market realizes how cheap they are. And here's all of the hedge trades, right? SQQQ is a hedge, and all of these TLT positions are hedges as well. The assigned shares or average cost on the assigned shares, guys, is not too much. The break even on these is about 97.15, really not that much higher than the current price of 95.70. And the call options, those will be the ones that we have to pay close attention to, right? So those still natural hedges. I still like them a lot and still am going to hold them, guys. You know, on some of them, we have a lot of time. January and the Junes, the December ones are kind of up for grabs. But then again, these are kind of like a YOLO play. If we got really bad economic data, these would have really flown. But as of now, guys, kind of just muted. We didn't spend too much money. And that's the key, right? When you go for the out of money with closer dates, don't spend too much on them. As you can see, I spent a lot more money on these in the money ones. And then lastly, we have a few more contracts down here. We have some new trades. Twilio, this one as well is a high conviction trade for me, but deeply out of the money and a lot of time. January 15, 2027, we opened them 2 days ago when Twilio was down here. I'll explain to you guys the thesis. We opened them when they were down here about roughly on Twilio, now looking good for the expansion. I'll explain to you guys the thesis. Well, number one, possibly coming into a monthly uptrend, recapturing the timeframes here. It is crushed, absolutely crushed. Looking good too. Look, weekly moving average, nice weekly uptrend right now. Look at the moving averages, right? Same thing that happened to PayPal is now happening to Twilio, curling above the moving averages, first time in the last 3 years worth of time. Bullish momentum is being recaptured by the stock. Now, this is not the thesis. This is the technical breakout patterns that let me know that the trade might be ready. What is the overall thesis for Twilio? If you guys don't know what Twilio does, they do they do a lot of different things, but the point of the business that I want to bring your attention to is their most recent partnership with OpenAI. They have partnered with OpenAI to enhance voice AI capacities, and OpenAI used Twilio in a most recent presentation. Go watch it on YouTube if you have some time. They used Twilio's voice AI services to call different places, place orders, and stuff like that. The voice AI actually works. It is capable of recognizing speech patterns, responding and whatnot. What is the application for this technology? And Twilio is the company that has the biggest lead on this technology. They're already partnered with services such as Uber, Airbnb, Amazon, now OpenAI, and a lot of other big players too. What is the end goal of this technology, guys? Well, think of all the customer service agents, right? Everybody knows that it's been a talking point. Companies are deeply looking to replace customer service agents with voice AI. Everybody has chatbots right now, replacing customer service agents in terms of chatting purposes, right? Now is the voice proposition. Now, yes, I know it's unfortunate for everybody who's going to lose their jobs over this, yes, but this is the thesis behind this trade. If this technology is as good as it is right now, and they're able to further improve it with the help with companies like Amazon and OpenAI as well, right? Perfect this technology to the point where a lot of other companies start wanting it and heavily wanting it. There will be heavy revisions to this company's possible sales outputs. And if everybody wants it, you guys know what happens when everybody wants an AI product, right? This one may have some decent legs. So that is the entire thesis behind Twilio. They do a lot of other different things, right? In terms of what they're known for right now, think of messaging services. When you get an Uber notification, a text message on your phone saying, "We found a driver for you. Your driver is coming," right? Those prompts are from Twilio. Amazon notifications as well, Airbnb notifications as well. That is Twilio's messaging service. Now they are delving into the voice AI side of things. So that is the thesis behind this long dated out of the money call. I'm giving it a lot of time for them to be able to refine that technology, for them to implement it across different companies, then for other companies to see it, want it, place the orders, and build a little bit of corporate FOMO behind this service, right? It's a thesis. Whether or not it plays out is anybody's guess, but I'm willing to take the gamble on it for about roughly $921. And then we have the waste management bull call debit spread right here. 2 contracts, 210 versus the 220s for January. And the waste management trade, very, very simple trade. We've went over it a few times on the channel. Very decent support level right here. Just looking to attack and expand into the 215, 220. If we get there, we'll be able to realize some decent profits on that trade. Very, very simple, very, very relatively safe way of playing this stock as well. And that will pretty much be everything for a very long portfolio recap. So hopefully you guys appreciated that. Hopefully you found value from it. Of course, if you want all these trades in real time, be able to discuss your own trades with me and everything like that, have access to our private live stream where I take these trades live. And if you want to have access to all these all of these different trade setups, right? We got something for everybody in here. Short-term trades, medium trades, long-term trades, lottery trades, all my trade ideas and high conviction trade ideas as well. Well, you guys know the link in the description for the Discord is always down below. Feel free to join. And if not, guys, feel free to also click the like button if you enjoyed today's video and subscribe to the channel if you're new. Would love to see you back. We do these videos every Monday to Friday after the close. And as usual, guys, if you have any questions at all, always feel free to leave me a comment down below. Looking forward to hearing from you, whether you want a second opinion on a stock, on an options play, macro discussion, anything you want, guys, leave it down below and I'll be happy to answer you. So take care, guys. See you over the weekend and peace.